Brad Williams, Frugal Finance. More currency. Dollar bonds versus yen bond. What's better? I'm going, all right, Williams, what is a dollar bond versus a yen bond? Something in the US versus something in the yen. It's just that simple. Or it could be corporate versus 10-year yen denominated bonds offering 3% per year. I kind of gave you a snapshot in the last session. So let's continue. Yen, dollar. What's the secret here? Conversion. Keep that in mind. Don't get caught in the weeds here. You just need to work through the conversion. We have 3% a year. You have an opportunity to invest 10 grand in dollar denominated bonds at 10% per year, or in yen dominated bonds offering 3% per year. What is the better investment? You're asking yourself, what? I have an opportunity at 10% in the US versus 3% in yen. I'm sticking with 10%. Are you? Well, let's see. Here's how it works. 3%. How many yen are you going to get for 10 grand? Well, you're going to get a bunch. Then what you're going to do is you're going to convert this million in yen. Why do a conversion? You get 100 yen for every dollar. A yen is worth 0.01, and that's what I was getting to in the previous session. Now we have 10,000 times 0.01 gives us a million yen, or $100 times yen, 100. Now we have 1,030,000 at 3%. We exchange this. Now we have 10,003 in terms of dollars. We get 10,003. We have 103 million yen. Year end, 1-1. All right, this is just an introduction. This is how it works. Keep in mind, you've invested in the 3% yen bonds, hence the product is 1030 times change in yen, not a million. At the 1-year maturity date, the US 10,000, that was converted to 1 million. You receive 1030, as I just pointed out, regardless if the yen currency increased or decreased. Typically, an increase in dollar represents higher GDP and higher interest rates. So if the yen increases from 0.01 to 0.08, interest rates may have moved higher. Again, this has no effect on the 1-year yen bond. What the U.S. investor needs to be concerned with is if the U.S. dollar increased in value or decreased in value. Why? Because now you're sitting on a bunch of yen, and that yen needs to be converted back over. What's the dollar? So we're investing 10 grand. We have interest earned was $1,000, and now you have 11 grand. U.S. dollar exchange rate 0.01. U.S. dollar exchange rate end 0.01. Equivalent equals a million. Interest earned on yen 30. So that was at 3%. So total 1030. U.S. equivalent 10,003. 10,003 versus 11,000. Bad investment, money losing. What U.S. dollar increase is required to equal 11,000? C28, 11,000, divided by C33, 1030. Dollar would have increased 6.8%. C36, 01608, minus C29, 01, divided by C29, 6.8. C33, 1030 times C36 equals 11 grand. All that was verification. US dollar with 8% appreciation. Okay, well, clearly it's going to be worth more. Now what we're doing is taking C29, again, conversion. We're going to multiply that 1 plus E38. What's the new dollar amount? E38 is 0.0108. Gives us 11,120. Okay, US dollar with 6% appreciation. We're going to see, I used the wrong number, 6% appreciation. This should be 6. And you can see, again, 10,918 versus 11%. So you need to keep an eye on dollar appreciation if you're going to be playing this currency game. You see it? It's easy to follow. You just have to do the conversion. Remember this 1030, this 1030 needs to come back to the US. You always need to convert that back over, whatever that dollar's worth. So you're going to take that 1030, you're going to divide it by whatever that dollar amount is. Remember, we did 0.01, but now it's 0.01068 if there's a conversion. And here we did 0.108 to give us this 11,124. What happens if the dollar price of the yen rises over a 1-year period? Think of the conversion back to US. And yen bond 5%, US 8%, 10 grand, 100, 500, 8. Okay, interest is 500. Here it's 8. So we're looking at yen, 10,500 yen versus 108 for US. Convert it over. We have this conversion. Yen appreciated 4%. How do we know? Okay, let's just say it did. Let's say it converted over to 4. Cost to convert yen to dollar is now 109.2. C52, this number here, times C50. 109.2. Okay, we had 108 over here. Now, what's the problem here? D50, which is 108 minus C53. In this particular case, the dollar went out of control. We have a losing position. C47 right here, 5% minus K58. K58. We're going deep here, folks. K58, 5%, the return is 5%. What are we doing here? We said the yen bond now is 5%. So let's look at the numbers. Similar to this up here, we're going to look at 5%, yen 100, conversion 10. We have 1050 yen. We convert that over to 1050. The return is 5%. Again, what do we have here? We have an opportunity to make 10%. Is that what it was? 10%? And we do this conversion crap. And in the end, our return's only going to be 5%. So we lose. If the investor intends to keep the money in yen, then the loss would be $1.20. He fails to take into consideration that the yen at some point in time will need to return to the US. The loss of a 4% yen appreciation against the US dollar is the US dollar weakens from 1 to 0.996. We have a 403 loss. So we take 105, divide this by C52, this is conversion, minus C50, which is 10.5. We have a $400 loss. And then what happens if yen weakens? You can see 10.5, we have yen converted. So we got 1 divided by 0.01. Then we have yen converted to US dollars, 96. And then US dollar change, 10.096 equals C69. 10,000 minus C66. Gotta go back up here. C66, which is 10.5. So you're going to lose. So you lose 3.85%. What happens if yen goes from 0.01 to 0.1002? Here we have 247 loss. And then what happens if it goes from 0.01 to 0.09902? So there's a 3% gain. This is something that you're going to have to spend a little bit of time. I can't break this down. It'll take me a long time to go through each one of these and evaluate them. I'm going to leave that up to you. First and foremost, you need to understand the conversion, whatever the yen is when you convert. Then what the yen is into the transaction. In other words, now you're sitting on yen. What's the yen? What's the dollar? So you need to be able to convert back and forth, and I'm not going to go through that other than what I just showed you. I know I'm going through this fast. It's just because there's a lot of numbers, and if you don't understand these yet, go through step by step. Look at the math. Do the conversion. You have 10 grand. Your 10 grand is 100 and a million. What do I'm talking about? 100. E58 is this 10 grand times D58, 01, equals 100. Then 100 times 0.01 is a million. Got it? So you're in 1050. So now you're going to take this number, F59, times 1 plus C56. Well, C56 is times 5%. That's what you earned. Year end, US dollar is $1, right? 558 is still $1. So conversion 10.5, 10.5. All right, that's fine. But that's not what your goal was. You could have kept your money here at 10%. So now you just have this loss. So what? Live and learn. Then here are just some hypotheticals. US weekends. So I just pointed out, and you have to look at what I'm trying to do here. 1.96, US dollar strengthens from 1 to 102. Yen weekends, 0.1. Go through and see what I did. It says yen converted, so 96 divided by 1.0104. Here we have 996. There's your 996. Divide this by 0.0. What am I doing here? That looks like the US dollar weekend from 1 to 196. And it looks like the yen went from 0.01 to 102. That is what you're dealing with here. In that scenario, you're going to see, after you do the conversion, that there's a loss. Dollar weekend, yen strengthened. What's the impact? 2% loss. Here, dollar strengthened, yen weakened. Here's a gain, 316. You got 10,816 against the conversion, but still a losing position. You could have kept your money here and made 11 grand. Maybe this was 8%. Maybe I was working on 8%. I'm going way too fast. Anyway, you get the idea. What I want you to do is work through this, do the math. It'll take a little bit in order to absorb. It's a lot of stuff here. One, it may be new to you and you're going, conversion, what? But it's fun. It's fun once you get it. So if you are a currency trader, you just look at it and you can see the conversion in your head. But as a newbie, you're going, what? And now with computers, it does it in microseconds. You, first and foremost, need to know the flow. If you're a math genius, you're just going to go, I can visualize this perfectly, and it's simple. And for others like me, when I'm trying to do about 17 different subjects, I can't remember all this. That's why I detail it as much as I do. And then this is just sloppy on my part. Sorry, I was probably in a hurry, and I'm always in a hurry. But work through it, and you'll make some assumptions. Maybe I wrote something here, and I just didn't note it. Lots of information. I'm just throwing it all at you at once, and is that fair? No, but this is Wall Street. Deal with it, baby. Deal with it. Brad Williams, Frugal Finance. Thanks for watching.